General Motors, ticker symbol GM, reports earnings next week, January 30th, before the market opens. And today, January 24th, we detected unusual options activity, as well as yesterday, January 23rd. And so in this video, we will review these two sets of data and then show how we are trading General Motors based on this data analysis. Because this data represents the trades of wealthy investors and what they are doing, which could be implications as to where General Motors will be going, bullish, bearish, up or down for earnings. And so, as you can see for today, at 2:20, 10,000 of the 34 strike calls expiring March 15, they were paying $214 each. Now, if we were to calculate this trade value, you can see that this is about $2.1 million. Typically, this would meet our threshold for a high probability of profit trade, and we would share this with our members only. However, because these 34 strike calls at the March 15 have an open interest of 15,000, there is a possibility that this trader closed out of these 34 strike calls, that they did not necessarily open these trades. Okay, even though there's a 10,000 here, this is less than 15,000. And that is why this is not a high probability of profit trade. We have to lower its probability because of this. And therefore, there is this higher level of risk involved with trading it based on just this data. However, yesterday's data, you can see here, is a bit more clear. Okay, January 23rd, as you can see here, for the Septembers, we detected these 35 strike calls, 8,500 of them, and the 37 strike calls, 8,500 of them as well. They were being done together simultaneously, 8,500 contracts, and they were paying $100 for each of these call spreads. Okay, so this is a call spread. This is what I mean by a call spread. They were buying these Septembers, 35 strike calls, and then selling the 37 strike calls. They are paying $1, which is 100 in dollar amounts. $1 is the options pricing, but the actual trade cost is 100. We have to multiply by 100 because of how the options are calculated. You can see that this is clearly a bullish long trade. Currently, GM trades at $34.59. As the price goes up, this becomes profitable. Okay, so we can see also here the deltas, a positive delta, which is a bullish long trade. If it was bearish, it would have been a negative delta. So for this data, we were able to confirm is opening trades. Okay, and you can see here that the open interest is a lot higher now than yesterday. And that tells us these were in fact opening trades. Okay, so based on this bullish sentiment, we will be trading long bullish on General Motors. And February 2nd is the closest expiration cycle for earnings, because earnings is on January 30th. So this is the cycle we will be using. This is how we traded General Motors bullish. We picked the 37 strike calls. We sold 2 for each of our trades, bought 1 for each of our trades of the 36 strike calls and the 37.5 strike calls. And when you analyze this trade, you can see that this is a broken wing butterfly strategy. Each of our trades costs $16. So we can easily position size depending on how much we want to risk, because if the earnings drops GM down, you can see that this would lose the $16 per trade. And so we can adjust depending on how much we want to risk here. Okay, and the key thing about this trade is you can see that if GM goes up, as we anticipate based on the unusual options activity, we could potentially make $34, which is 200%, right? 16 times 2 is 32, so we're making at least 200%. This is a risk to reward ratio of 1 to 2. Okay, so we want to make sure our risk to reward ratio is in our favor, where we can risk something less than our reward. We want our reward payout to be higher than what we are risking, so that the odds are in our favor. Okay, so that is our strategy going into next week for General Motors earnings. Let us know what you think in the comments below. Please smash the like button, and if you're interested in the higher probability of profit trades that we share with our members only, not like these earnings trades which are lower probability of profit because earnings are riskier, then check out our website. We'll put a link here where you can learn more about how we analyze and use our strategies and share the stocks that we find that are being traded by the millionaire traders in the stock market